This is Bloomberg Best. I'm Rishika Gupta. Let's continue our global tour of the week's top stories in business, finance, and politics. A new chapter in the Brexit saga opened this week as the UK and the EU began talks to define their future trade relationship.
British and European Union officials will start hashing out a post-Brexit trade deal today as negotiations on the future EU-UK partnership formally open in Brussels. Bloomberg sources raise concerns that red lines on both sides could put the chance of an agreement to danger already by early April.
No one is surprised to hear that the Prime Minister says he can get a Canadian-style deal by the end of the year, that he doesn't see a full need for convergence when you look at the European rules, and that June is really what he says will be the deadline, and he's prepared to walk away without a trade deal if that is what it takes. Now, the Europeans have repeatedly said they see this as a full package and nothing will be agreed until everything is agreed.
Turkey says it won't stand in the way of refugees that want to head to Europe. It's igniting fears another wave of migration could derail a delicate recovery for the entire region, which is already grappling, of course, with the spread of the coronavirus. It does seem as if we've heard a lot of rhetoric on both sides, a lot of heated words from President Erdogan, and also the Greeks talking in fairly heated terms about what this is going to do, and some clashes on the border.
The Turkish side is saying that up to 100,000 refugees has actually left the country. But of course, it's unknown whether they've actually managed to enter the border with Greece and Bulgaria, or whether they're stuck in no man's land. President Erdogan, for months now, has been threatening Europe with opening its borders, saying that it can no longer look after such a high number of refugees. Of course, Turkey is already home to 3.6 million refugees, and more is coming across the border due to the conflict in the Idlib province.
The International Monetary Fund held a news conference earlier today on its projections of possible economic fallout from the spreading coronavirus, saying that outcomes remain very uncertain, but it has seen what it calls a, quote, shift to a more adverse scenario for the global economy. As I understand it, besides the news conference this morning, you also had a conference call of the 24 top central bankers and finance ministers. That includes, for example, Stephen Mnuchin, the Secretary of Treasury, Mark Carney from the Bank of England, and we had Madame Lagarde as well. What was the tone on that call, if you can describe it?
Very serious commitment to take actions in a coordinated manner. We prioritized actually collectively with a great degree of consistency. First, funding health systems. Second, fiscal measures that are well targeted. Third, a great deal of attention on liquidity. So the message from the call was act. Better to do more than to do less than necessary.
South Korea has joined the likes of Italy and Hong Kong in announcing an economic aid package, including an extra budget of $9.8 billion.
You're seeing a flurry of new activity across Asia, and Korea is just one that is particularly newsworthy today. This big budget is being rolled out on top of an annual budget, we should say, that was already the biggest on record. They're planning to fund this new stimulus with a new flurry of government bonds. And it looks a lot like what others in this region have already rolled out, targeted financial support for the medical response immediately, as well as a package for businesses, and then
coronavirus. Europe's spending is almost entirely confined to Italy, which has been hit hardest.
We also see increases in France, the Netherlands, Belgium, and so on. The EU is saying we are seeing coordination between member states, but at this point, each individual nation is doing its own testing, they're doing their own rules, and we're still not actually seeing a coordinated response, at least not on the fiscal front.
After a week of political turmoil in Malaysia, there's a new prime minister to succeed Mahathir Mohamad, who abruptly resigned last week. Muhyiddin Yassin was sworn in after the king decided he was the politician most likely to lead a majority in parliament. Muhyiddin gained power with the support of the party of ex-Prime Minister Najib Razak, who's been prosecutor over the 1MDB scandal. What does this mean for Mahathir? Is he then out of the picture?
Mahathir is never really out of the picture. And in fact, he says he has the support to form a government. He says he's got 114 people that back him. That's two more than you need in Parliament. So he wants a no confidence vote called right when Parliament convenes again. He was a bit taken aback by the King's decision, and he expects to challenge it right away. Now, whether that means, Mahathir goes to the King and says, look, I can form a government, I should be Prime Minister, or whether it means Malaysia goes to a snap election, that's kind of where this thing looks like it's heading.
Senator Elizabeth Warren ending her presidential campaign today, speaking with reporters outside her home in Cambridge, Massachusetts earlier.
Important development, particularly where her supporters go, even before an endorsement that likely will be coming. Now, it's unclear who she will endorse. It is also unclear where her supporters will go. But with her out of the race, it now becomes a two-person race between Senator Bernie Sanders as well as former Vice President Joe Biden.
Watching Bloomberg Best, I'm Ritika Gupta. This week, Nissan CEO Makoto Uchida sat down with Bloomberg's Reed Stevenson for his first exclusive interview since taking over the troubled automaker in December 2019. Uchida says he plans to unveil a turnaround plan in May. In the meantime, he's focusing on cost cuts while he works to rebuild the company's culture.
When I look at the individual Nissan's ability, it's much more than what I know today. So therefore, I'm saying that once if we have very good company's way of the working or directionally how we can set it properly, there should be the result will be much better than what we are showing in terms of our performance.
Apart from cost cutting, which everyone likes to talk about, what sort of investment do you think needs to be made in the business?
Definitely, when you talk about the investment, there's many kind of area. For instance, for our human asset, that is continuously what we have to seek for. And also, when we talk about the new era of the business, and what direction the Nissan, the competency has to be further enhanced, then definitely that will be the area we need to further invest.
As you consider everything that's happened with Nissan over the past 18 months, it's not an easy challenge for any executive, and you've just come on at the end of 2019. Can you tell us a little bit about how you view the challenge and whether it has sort of changed your view on whether success is reachable or not? I mean, it's probably going to be absolutely necessary. But was there anything that surprised you about the scale of the challenges facing you and the company right now?
Definitely, it's my first time to be a CEO. So there was a lot of challenge which were unexpected. But day by day, I would like to further discuss with our employee, then trying to understand how they're feeling about the company, what has been not been on the way that they want it to be. And it is important for me to know transparently what is really going on from all the executive down to our employee. Then after having those to be put it united or something to be together, then I would believe the power comes from there. And once we have internal better strengths, that would be reflected external.
Coming up on Bloomberg Best, compelling conversations with a global slant. Hong Kong's financial secretary explains why the government's handing out cash in its latest budget. The head of India's central bank says he's got policy space to combat further shocks from the coronavirus. And what a week it was for the Fed. Perspective from two important insiders up next.
This is not about conditions now. It's not about the current stock market.
We can meet at any time and move at any time in this kind of situation.
This is Bloomberg. Welcome back to Bloomberg Best. I'm Rishika Gupta. Hong Kong got another dose of gloomy economic data this week. Retail sales in January declined for the 12th straight month, falling more than 21% by value. That print comes days after the government announced it will give cash handouts to all adult citizens and permanent residents in a bid to stimulate the economy. Bloomberg's Yvonne Mann spoke with Hong Kong's Financial Secretary Paul Chan about those exceptional budgetary measures.
Exceptional measure in exceptional circumstances. People are suffering, businesses are suffering. So given still we have a pretty handsome fiscal reserve, I think spending some of the reserve to help business, to help people, is in line with the expectation of the people.
Will a cash handout of this size, you think, get people to actually go out and spend? What's going to stop them from saving it in the bank or spending it overseas?
People would spend the money depending on their circumstances, but we would encourage them to come out and spend, and encourage the business sector to come up with different incentive programs to attract people to come out. Yeah.
What do you say to the economists out there that say, you know, this cash handout is just not targeted enough, that this is just a drop in the ocean for many, and you could have used the same amount of money to really help the people in need? What do you say to those people with that view?
Well, people of Hong Kong like to have choice. And indeed, given this difficult situation, I think the individual circumstances varies. So by giving a cash handout and appealing to the people to come out to spend to help our business, encouraging the business sector to come up with incentive programs to complement this initiative from the government, I think people would, of course, depending on their own personal circumstances, would support us and to support Hong Kong.
As central banks around the world consider policy responses to the coronavirus, the governor of the Reserve Bank of India spoke exclusively with Bloomberg this week. Shaktikanta Das told Stephanie Flanders that he expects to work with other central banks on coordinated action in the coming months. And he also believes the RBI has room to cut rates if India's economic situation warrants it.
In a situation like as we have today, coordinated policy action has become that much more important.
One of the things that we might be looking at is inflation coming down quite sharply from the relatively high January number, maybe even falling by a full percentage point between January and February. Does that take some of the pressure off? Does that give you more room to respond, to support the economy?
You see, the central bank, that is RBI's response will be, one is with regard to decisions which are outside the monetary policy, that is outside the interest rate cut. So far as interest rate cut is concerned, we have said it very clearly. The Monetary Policy Committee has said very clearly in its last minutes, and I have also said it in my minutes, that there is space for further rate cut. And so that is one option which is available. The other option is in terms of supporting the markets by liquidity, building confidence, or using various other tools and instruments to deal with emerging challenges. That the RBI is ready, and as and when there is a requirement, the RBI will act.
Perhaps the most consequential news of the week was the Fed's decision to cut rates by 50 points 2 weeks before the next scheduled FOMC meeting. Two top Fed officials spoke with Bloomberg about the unusual move and the policy path ahead. Let's start with Dallas Federal Reserve President Robert Kaplan.
If you'd asked me 2 weeks ago, I was saying publicly, let's see how this unfolds, and I'll make a judgment at the meeting. And it's too early to comment. What happened once the virus got to South Korea and then to Italy, and it was clear there were diagnosed cases in the United States, for me at least, the probability of a deterioration in the U.S. economic outlook, the probability of that increased to the point where I came to the view we were going to need to take action at the FOMC meeting. And then I felt this situation is changing so rapidly that I thought it would be wiser, and I'll explain a little bit why, to act now and act boldly where it could make an impact. And here's what I mean by that. It's not going to help with obviously the number of diagnosed cases. It's not going to also get people to want to go out. It's not going to do anything about the containment reaction if the diagnosed cases spike. What it will do, though, is if we enter a period as a result of containment where we have a severe slowing in the economy that lasts for some period of time, accompanying that is likely to be a tightening in financial conditions. And what monetary policy can do is, if we go into this with somewhat easier conditions, I thought, and I still believe, it will help to moderate or mitigate some of that inevitable tightening of financial conditions that will happen as a result of this spike in cases and the containment. And so the judgment about the wisdom of this is more looking ahead to what's going to happen in the next 6 to 8 weeks, not what's going on right now. And in that regard, I feel as confident today that we did the right thing as I did on Tuesday. And I'll say one other thing.
Okay.
A number of people had a reaction because the market on the day we did it sold off. And I will tell you, if the market had gone up that day, that would have given me no comfort whatsoever that we made the right decision. And by it selling off, it didn't make me feel that it wasn't the right decision. This is not about conditions now. It's not about the current stock market. It's about mitigating a tightening of financial conditions that will likely happen some number of weeks from now, and increasing the likelihood that as we come out of this situation, we can come out more strongly.
The market's done a lot since your 50 basis point cut. We're looking at the S&P down about 2%. We're looking at a 40+ basis point move in the 10-year. What changed? Anything changed for you since 4 days ago?
Obviously, there's a lot of volatility in markets. Not surprising. Everyone's trying to get a handle on how to price trillions of dollars of stuff all around the world. And I think we're all struggling to try to understand what the effects of the coronavirus are. And so I'm not surprised by volatility in markets in that kind of situation.
Well, if you, as Jay Powell said, cut to help restore confidence, not to be rude, but it looks like you failed. Is there anything you can do anything the Fed, a central bank, can do to save these people out there?
No, I think we correctly positioned the policy rate given what we knew as of the Monday-Tuesday time frame. And everything's on the table. We're willing to do more, but we're monitoring the situation. We can meet at any time and move at any time in this kind of situation. I feel like we're playing this exactly as we should. There's downside risk to growth. We'll see how it plays out. It kind of seems like the market's pricing in the very worst case. Okay, but we'll take that on board and we'll go forward and monitor this day by day.
Have you ever had less visibility